CPA Michelle Staebell is back with us this morning. Good to see you. Welcome.
Thanks for having me, Mark.
All right, so we're talking about already the 2020 tax season, and our topic this morning is something that really kind of happens every year, changes, right?
Yes.
There's always changes in the tax code. So what are we talking about today?
So a few more changes coming up for the 2019 tax returns that will be filed in 2020. Changes to things that are allowed to be, amounts allowed to be contributed to health savings accounts, retirement accounts. Then there's some changes in deductions, how much people can deduct for medical expenses, and even alimony has a big change coming up this year.
Okay, some of those things affect just about everybody watching, so let's dive right in. Let's start with the deductions. Okay. What's changing?
So if a taxpayer itemizes their deductions, they might add up their medical and expect to be able to deduct that. While the floor for deducting medical expenses has raised from 7.5% to 10% of adjusted gross income. So it's going to be even harder for taxpayers to take that deduction for medical expenses.
Okay, because that floor has now gone up.
Yes.
What else? You mentioned something about alimony here.
Yeah, so alimony is a little confusing. So for divorces that happened in 2018, nothing's changed. If people pay alimony, they're still able to deduct it. But if a divorce happened in 2019 or later, or was restructured in 2019, the taxpayer paying the alimony can no longer deduct that on their tax return.
So can they deduct any of what they pay in alimony?
Nope, and the recipient doesn't have to pick it up as income. So a big change for divorces happening in 2019. Nothing is changing for old divorces that happened before 2019.
Right, it's just this year, 2019. All right, you mentioned, let's see here, contributions.
Yep.
401k plans, right?
Yep, retirement plans went up. Every few years, the amounts that you can contribute to retirement increase kind of with inflation. So for 401ks, it went up to $19,000. It was $18,500. And for IRAs, it went up to $6,000. It was $5,500. So people can contribute more to their retirement accounts.
And if you're over 50, you can have a little catch-up.
Yep, you just catch up. Exactly.
Okay, and then health savings accounts. What's changing here? Because this affects a lot of people.
Yes, if you have a high deductible health insurance plan, you should be putting money aside into a health savings account, and the IRS limits how much you can put in there. But they did increase those limits for a single-only plan. Up to $3,500 can be contributed. Family-only up to $7,000 can be contributed this year.
In this situation with some of these changes specifically, people that have small businesses or if they're freelancers, they for work, especially, this should be a red flag for them, right? Yeah,
we're in a pay-as-you-go tax system, so a lot of people wait until they file their tax return to look up all these laws because they're not doing this all day, every day like a tax professional is. And it's not good enough. If a taxpayer, especially a small business owner, isn't staying up with their situation, they might owe taxes, and that means they're going to owe interest and penalties on top of what the taxes they owe, and nobody wants to pay more than they owe.
No, I've yet to find one person who does. Thank you, Michelle. Appreciate it.
Yeah, thanks for having me.
So changes coming, changes we all need to be aware of. If you missed any of our conversation, we'll share it online as well. In the website, nysscpa.org/getmoneysmart. We'll have that link as well at rochesterfirst.com.